Hey, a lot has been going on. We are seeing gold at 1,300 an ounce. Silver making new highs, new nominal highs, although it's pretty much the same levels that was seen in 2008. The Dow, as you can see, at 10,850, oil 77.63. XLF, that's an ETF for the financials. It's a little over 14 and a half. We'll go over a few of all of these different codes, stocks, or gambling funds, if you will, depending on, of course, how they're played. A lot has been said about Mike Maloney. $10 for oil on a Fibonacci level. If keyword if another crash happens to take place, then the numbers I have is $13 per gallon. So it's extremely, extremely close. So I want to start off with gold here at 1,300. It has retraced 182%. That is the crash retracement from its highs in 2008 or 2007. I think those are all 2008 with the exception of XLF and the Dow. Those are 2007. So from the highs of gold and the lows that they had, it has retraced 182. So if it gets over 100, it means it's making a new high. Gold has been outperforming pretty much every other major type of fund that there is. Silver now at 2150. The old high was around 2135. So it pierced above it, but what I like about the silver action is it's been a very boring rally. And I say boring as in it's been slow but sure, stair-stepping its way higher. A percent gain this day, 2% gain this day. Really no 5, 6% moves. All the corrections it has had has been corrections through time, meaning for 8 hours, even a day or two, it has corrected in a trading range. And the biggest retracements it has been 1, 2%. So that's quite significant that it's been doing this. And I've said on the blog that just because it's at an area of resistance doesn't mean that it is actually going to be that case for you could have resistance there for 4 days and then go higher and then maybe break right through the 24 level. This 21 level is pretty significant for it is a Fibonacci. It's many different Fibonacci levels. I went through it on the blog. I'm not going to go over them again. The Dow has retraced 61.8% and not at 10,850 because it's down 3% from its highs of this year, which is 11,200. So it hasn't been as productive as gold and silver has been, where oil has only retraced half of its losses on a linear base. And that's from its highs of 89 because it's down 11% from its $77 high. Now, for a while, I haven't really said it on here, but I'm very, very bearish on oil over the long-term time frame. I just don't know when that's going to be. My thinking would be when we're no longer priced in dollars anymore, but I don't know. And I'm saying that because of the newer, cleaner energies. And really not the hope, but the prediction that the newer energies will be coming in. Because some people say it's meaningless to hope for something, which is pretty much true and definitely pretty much false. There's nothing wrong with hoping for good things to happen or unexpected, but being realistic at the same time is important. You can hope to win the lottery, but expecting to, it's something that's not going to happen. Now, XLF, that's an ETF that tracks the financials. At 1460, it's only retraced about one third of its value from its 07 highs and its '09 lows. Also, it's down 15% from its highs of about $17 a share. What's interesting is if you look at the options that they have, the option puts, which is ways of gambling, even the calls, I guess, the options for the financials for the long-term time frame, we're talking 8, 9, 10 months from now, they really don't see much happening whatsoever. To me, it seems as if one, it's just going to stay in a large trading range for quite some time. Don't know. Or the derivative market's going to explode, and even if you have successful put options and call options, it may not work out. After all, if we do see oil at $10 an ounce, the question is when will it start to retrace? You got to look. I'm going to use Brian Shannon's different line that he says on here, and that is to see where we are now, where we were, and where do we have the potential to go. Well, a lot of these markets are in bull markets, so to say that they're going to top out now, I'd have to say no. There should be a lot of steam left for all of these markets right now for at least a short-term period to go higher. And we could see silver go up to 32 or 50 before having a major crash, because if silver goes to 50 an ounce and then falls to 24, which would be half of its value, then people would be saying the market's manipulated or it's down too much, that sort of deal. And if, say, for example, the rally continues before the retracement, then these big moves are definitely available to potentially come into play. Silver has been known for having big moves in the past at short periods of times. There's nothing to state that it's not going to happen again. Now, moving back on with the call and put options, if you are in any type of stocks, 401k plan, and you want to protect yourself, the safest mathematical way seems to be by placing different put options long term for different codes like SPY and the Qs, and definitely the ones you have, but especially XLF, because if oil goes to 10, the financial system's done. XLF is done if the oil goes to 10. There's no denying that in my mind. And yeah, it's done. It's completely done. Where, say, like I said, silver may fall to 20 or 16 or 15. I've had some people say, well, silver's going to fall to 10, and even some people say, well, oil can't go down to 32. Oil can't go down to 10. That's too low. Maybe 32, 35. Well, there's no such thing as up too much and down too much, and any big crash would have to take out the new lows, especially when it's unable to retrace back to its previous highs, because gold has retraced to new highs, and silver pretty much also has. The odds are that on their crash that it's going to be much better than it was before, where last time silver crashed to 8.5, this time it might be 12 or 13 or 14, and like I said, it might crash down to 23. You don't know how high it's going to get. And like I said, with the puts, it just seems as either it's going to stay in a trading range, either there's a lot of profit in it, or a derivative market explosion, because it doesn't make sense why it's so cheap to do like $12, $13 puts on the financials, and even for that matter, $17, $18 calls are extremely cheap also, which doesn't make much sense. And I'm talking like late next year type of options. So I'm going to finish this off with a quote from Demcab: "The future belongs to those who prepare for it today." You still got time to prepare, and I don't know how much more, but thank you for watching. Bye-bye.